Yo, how y'all doing? What's going on? Now I know y'all been hearing it for a long time, right? Don't ever get a mortgage. Don't ever get a mortgage. You pretty much just paying on interest. Don't ever get a mortgage. Run away from it, right? Now, this has been told to us for a long time, but it's a flip side. Now, if you intelligent and you understand business, if you understand how business works, right? Now, a mortgage on one hand is a liability, right? Just a mortgage is pretty much you paying interest towards a bank and you paying just a little bit on your home. You probably pay off the house 3 times, and 2 of those times will be strictly interest. But let me show y'all the other side of having a mortgage. Anytime you put a mortgage on your credit report and it shows positive payment history, a mortgage open your options to get approved for almost anything, right? So when y'all looking at like banks, when they give out like home equity line of credit, home improvement loans, or even if you're dealing with personal loan, they always want to see what are you paying back to let them know if you can secure this loan or not. I've been hearing plenty of credit gurus. They've been, oh man, just build your credit, get a secure card, and that's it. But that don't really give people access to over $100,000 in personal loans, or $100,000 or in $100,000 vehicles at 100% financed. They don't even get you no vehicles 100% financed. You know, realistically, most lenders, whether you getting a credit card, an auto loan, or even a personal loan, they always want to know, do you have any big installments on your credit, such as a mortgage or a car? Now, a car is below a mortgage, right? But it's good. Don't get me wrong. You can get something going if you ever had a car paid off on your credit. But having a mortgage on your credit is about 4 or 5 times stronger than the vehicle. The reason why, because a mortgage shows stability. Mortgage shows that you are a good pledger. Having a mortgage shows that your ability to pay back. Because anytime the bank see you entering the application, like say if it's a personal loan, right? If they see no mortgage on your credit report, you are a high risk borrower. You get what I'm saying? So you are a very high risk borrower in any situation. And another thing that a lot of credit gurus who be touching $1 million in credit cards and they be having major business loans, look, this is what they be telling y'all. Start a business today and get $50,000 in funding. But this is what they missing. They don't, like the average person who just got nothing on their credit can't go into any bank. I don't care who you name. Can't go into any bank and ask them for $50,000 strictly with weak credit. You can't. And most of those people y'all see on TV got mortgage loans under their personal social. So anytime they fill out a credit application, a business loan, and it shows they got a mortgage on their credit report, they got access to any line of credit they want, any business line of credit that they want. There's no limitations on how much money you can get, especially when you have a mortgage on your credit, because it shows you that you are a less risk borrower. You actually have real property on your credit report, and that's the asset of it. So, like I said, it's a lot of pros to having a mortgage on your credit, because without that, it's like you will be taking a lot of risk. You won't get the results that you've been looking for. You won't be getting them big lines of credit on the first rip. Like say if you got a good business, a real good structured business, you had it for like 3 years, right? And now you go to the bank and you say, hey, I want to apply for a credit card. Your credit card ain't gonna be 50, 60,000 on the first play. You might have to wait 6 months to a year to even touch 50,000. You get what I'm saying? So that's why I always say you want to understand credit, and that's one of the main factors of credit. They ask you, do you have any mortgage loans or revolving accounts? Now, revolving accounts is like credit cards and all that stuff. It's okay, but credit cards ain't getting you a $100,000 business loan. I don't care what video y'all watch on YouTube or what y'all see in the credit bureau. The credit guy getting it. No, if you don't have a mortgage on your credit report, you naked to the bureau, to any lender. You a high risk borrower to any lender. And I had to learn that because I told myself, like, I'm really not a true big proponent of having a mortgage, right? But I want a home. Like, of course, I want a real nice house, right? But at the same time, it's a lot that you really paying towards the banks. Like the interest rates now is like what, 7%? Now that's a lot of money. But you ain't looking at the fact that you got access to so much credit. Realistically speaking, millions of dollars in credit. Not even just credit card, not even just personal loans, not even just home improvement loan. You can borrow against your entire equity of your house. You can borrow 90% of your house. You get what I'm saying? So depending on what you want to actually do with the credit on your mortgage, some people do stupid stuff with it, like get a credit card and max it out. Me personally, I can borrow against my own house, and I'll go build a house myself and sell it, and go back to my lender and borrow and get another house, and keep getting mortgages and do the same thing. You feel what I'm saying? So when you're looking at your financial portfolio, it's all on your credit report as well. So the bank see car loan, mortgage loan, credit cards. You are a low risk borrower. And that's why it's so easy to get anything you have a mortgage on your credit. I personally did a test. So I know you guys see my brother, Rich. Y'all see him coming on live with me. He got the mortgage, right? So I'll compare him with me. He can get anything he want. And as far as credit, he's 90% approval. 90% approval means you getting everything you want. It's always going to be that little 10% that might say no, or we need additional documentation. But for him, it's 90%. For me, it's like 30%, 20%, because you still a high risk borrower to any bank. Don't matter if you got a 780 credit score. Don't matter if you have an 800 credit score. If you don't have a mortgage on your credit report, you a high risk borrower to any bank. That's why when y'all go to dealerships, right? You, like, say for instance, you don't have a mortgage on your credit, you only got credit cards. He has a mortgage on his credit. He going to the dealership, hey, what do I qualify for? They run his credit report. Oh, he got a mortgage he paying back. How much the mortgage amount for? Let's just say $430,000. So the mortgage was $430,000. Now let's see what he got on his credit report. He got 5 credit cards. What's the limits? 5,000, 10,000, 3,000, 8,000. Okay, the dude with the credit cards, we're gonna tell him put a $5,000 down payment. The guy who with the mortgage, 100% finance, no payment down. That's it. Because you are not a high risk borrower when you have a mortgage on your credit report. Even if, I'm gonna tell y'all something else. Even if you got collections on your account, you still can get through with a mortgage on your credit because you're still a low risk borrower. You get what I'm saying? You a low risk borrower at all times. So don't let everybody tell y'all just a mortgage is bad. No, you got access to a bunch of credit, especially if you're an entrepreneur. So if you're an entrepreneur, say if you got your LLC, you got your documents, now you a fresh startup, but you got a mortgage that you've been paying on it, even if you paid 3 months on the mortgage, right? You go to the bank and say, hey man, I want to borrow a business line of credit. And your mortgage payment has been 100%. And they say, how much do you want to borrow? Let's just say, if you say 150. When they run your credit report, the debt that you are paying is triple the amount that they're trying to give you. So they'll give you that in a heartbeat. But let's just say if you got a 680, you still get it. Let's just say somebody coming in with a 780 credit score, 100 points over yours. He just got credit cards on his stuff, right? He might apply for it. They might say 10,000. You apply for it, they give you the whole 150, no pushback. And that's why it's so important to have that on your credit. I've been saying this for a long time. That's one account that you need on your credit report. That's one account that you truly need on your credit report to really flourish. If you're talking about unlimited credit, doing what you want, building your business, your startups be easy. You feel me? Easy. You get what I'm saying? So when you starting up and you got a mortgage on your credit and you say, hey, I need to borrow $75,000 for a business loan, and they see your credit report and you got a mortgage and you paying it back, they're going to give you $75,000. But if you just got credit cards, kick them out the door because you are a high risk borrower. And that's why they keep trying to tell people, oh, get a mortgage, get a mortgage, get a mortgage. So we looking at it as a normal consumer, we looking at it as a scam. Oh, this is a scam. Don't ever get a mortgage. You don't want to be paying the bank. But you're like, hold on. Why am I getting denied for everything? Why I don't have access to hundreds of thousands of dollars in credit? Because you don't have any debt that suggests that. Why would I, say if I was the bank, right, check this out. You have debt, right? Let's just say your debt is $10,000 in credit cards. His debt is $400,000. You're managing $10,000 positively. He managing $400,000 positively, right? If I had to give one of you guys a $100,000 loan, which one would I give it to? The guy who just paying on a $10,000 credit card, or a guy who paying on a $400,000 loan or mortgage, however you want to say it? I want to give it to the guy who's paying on $400,000 because he's managing 4 times the amount that I'm trying to give him. He has to manage $400,000 home while you only managing $10,000 in credit card. You are a high risk borrower, so I cannot lend this to you. And guess what? After he get a mortgage, not only will I give him the 100,000, I'm also going to send his profile out to other lenders to see do they also want to lend to him. You get what I'm saying? I want to lend him. They want to lend him stuff. Other companies want to lend him stuff. Those other companies want to lend him stuff. No one want to lend you nothing. So you have the $10,000 credit card with a 780 credit score. He has the mortgage with a 680 credit score. Everybody want to give him the money. They don't want to give the guy with the credit cards the money. You a high risk borrower. I'm not saying you will default on it, but I would rather feel comfortable with him. And on top of that, he has equity. He has a property. So if I want to take him to court, I have the address on his credit report. So everything aligns when it comes to him. He's a successful borrower. He's been paying on a $400,000 loan because mortgages are considered loans. He's paying on a $400,000 loan. Why would I not want to give him anything? I would love to extend credit to him. And not only will I extend credit to him, but if he have a business and I have to run him as the personal guarantor, meaning I have to run his social, I'm going to lend to him every day. Because on the business side, he can have a little slight, history, right? But on his personal side, he have a very strong profile. So let's lend to him, and that's a better situation. So that's why I try to teach this, and I don't stress this enough. Get a mortgage on your credit report, especially if you're an entrepreneur and you need to build. I'm talking about build. Get nothing but credit to get more wealth. But you gotta use everything as an entrepreneur, not a consumer. So they give you a $40,000 credit card. Do not buy stupid shit with it. Actually be smart and strategic. Take your time, pay off everything, and make sure you're good. I'm out. Peace and love.